Good day, ladies and gentlemen. And again, it's April. It's Zurich Invest time here. We are at the Grand Hotel here in Zurich. And my first interview partner is Wilkes, the president and CEO of OceanaGold out of Australia and New Zealand. Mick, welcome.
Yeah,
thank you very much.
Thank you very much, Jochen. Great to be here.
Thanks for taking the time. It's the first time that I have the chance to interview you. I'm very happy about it. And give us a short overview about your fantastic company.
Yeah, well, thanks very much for the invitation, Jochen. It's great to be here in Zurich again. Yes, OceanaGold, we operate in New Zealand, in the USA, and also in the Philippines. The great news about OceanaGold this year is that we're commissioning a brand new gold mine in South Carolina called the Hale Gold Mine, and it's the only gold mine on the east coast of the US, and it's got some great history we can talk about. Also, we've been operating in New Zealand for 26 years, and we've got some good growth plans there to grow that, continue to operate that business for another 15 years. And we have a very profitable mine in the Philippines.
Perfect. That's important, profitable, because that's always the key to success and for shareholders also. So let's dive into your numbers maybe before we come to Haley and the commissioning and the ramp up. What have you produced last year? What were your AISC?
Yeah, so last year we produced around 420,000 ounces of gold. We produced some copper as well out of the Philippines. And our all-in sustaining cost was $708 per ounce. So we are one of the lowest cost producers on the planet. And we have plans to grow our production and maintain our strong margins going forward.
Fantastic. How about the production on the Philippines? You said some copper also, because I heard, let's put it that way, Philippines were a little bit of irritations politically wise. So what's going on there? Have you been affected?
We have not been affected. Our production continues unaffected. We produced 140-odd thousand ounces last year, and this year we'll do something similar. We produced about 20,000 tonnes of copper last year as well. So it is a significant operation. It's got a long mine life. It's got a very low cost production and is generating a lot of cash for our shareholders. And we are very confident that we'll continue to operate there for a long time to come.
Fantastic, great. When you say generating also cash for the shareholders, are you paying a dividend already?
We are. We have paid a dividend for the last 2 years. It's a modest dividend. It's one we can afford, but it's one we want to keep paying for a long time.
And maybe rising?
Yes, I hope so, with the success of the company.
Because, you know, all the Germans and the Swiss are big dividend fans.
Yes. It's part of the philosophy that we want to show our shareholders that we are disciplined with our financial governance and our plans, and dividends is definitely part of that.
Fantastic. So let's come to the Haley project. You bought that, you said, like 18 months ago, right?
Yes, 1.5 years ago we bought it. We bought the Ramaco, the company, and immediately got into construction of the project. And now I can proudly say that it's built and it's up and running, and it's in the final stages of commissioning. This year it'll produce about 150 to 170,000 ounces of gold and a little bit of silver as well. And then over the next 3 years, we'll ramp that up to around about 250,000 ounces of gold, which will include a larger open pit and an underground mine there as well.
Okay. As you had $708, you said AISC last year. What is Haley from the cost side?
So this year, Hale will produce at around $550 per ounce, all in sustaining costs. It's got very good grade and very good, low cost inputs. It's in South Carolina, so it's a very, very safe jurisdiction.
Absolutely.
And it's got a great competitive tax rate, no royalties, because we own all of the mineral rights there. So it's a very, very good operation for us, and it will take us to the next level of production and lower our cost base this year. So overall, our costs will come down from $700 per ounce all-in sustaining costs last year to $600 to $650 per ounce this year on a production base of 550 to 600,000 ounces this year.
Wow, so that's the guidance already for 2017, because that would be my next question. So you answered it already. Fantastic.
Got ahead of the game.
Great. Where do you see, let's say, as an average in your company group, as you are producing on several spots, where do you see the mine life?
Well, the mine life in Hale is currently going out past 2030. Similarly in the Philippines, where we've got a mine life going out to 2032. Currently our 2 New Zealand operations have a 3 or 4 year mine life based on reserves, but there's plenty of upside there with the very profitable Waihi operation in the North Island of New Zealand produces around about 120,000 ounces a year at an all-in sustaining cost of about $750 per ounce. We have been drilling with 8 drill rigs continuously since we bought the mine about 2 years ago, and we've added to the resource base significantly over that time and after depletion, and we'll continue that drilling program over the next, ensuing foreseeable future, and like to build a 10-year mine life there. There is potential to keep that mine going for another 10 or 15 years easily. And then in the south, in Macraes, in the South Island, where we've been operating for 26 years, we've produced over 4 million ounces from that mine during that time. This year we'll produce about 180,000 ounces. It is a bit more higher cost because of the low grade and the higher strip, but that's the nature of the business there, and it's been continuously operating for the last 26 years. And we see another 4 years in front of us, plus there's a redevelopment plan for Macraes, which will keep that mine going out to 2030 as well.
Fantastic. I mean, but even if you have a little bit higher cost, you still make a nice amount of money.
Oh yes, that's
important.
There's a good $200 to $300 per ounce margin on that operation as well.
Fantastic,
yes.
Great. Final question. Let's come a little bit to, let's say, the treasury and the debt side of the business. I mean, how does it look like? What do you have cash in the bank? What is the debt situation, if you have any?
We run a low cost as well.
Of course.
A low debt ratio business. So we currently have total debt of about $270 million against a total asset base of $1.8 to $2 billion. So a low level of leverage. Cash in the bank of about $60 million at the end of last year, and so that our intention is to pay down our debt now that we've got Hale up and running. And we'll pay down that debt as per our commitment to our syndicate of banks, which is a plain vanilla corporate debt facility with very low covenants, very low interest rate, which I like a lot. And, we'll pay down that debt. And then we've got our relationship in a strong position to if we need finance for debt finance to invest in the business further in the future.
Fantastic. That was a great final sentence. Thank you very much on that. I really look forward, to follow your company also, and all the best for 2017.
Thank you very much, Jochen.
Thank you very much.
Pleasure. Bye.
Ladies and gentlemen, that was Mick Wilkes, the President and CEO of OceanaGold. And you heard it, the company is in sensational shape, I must say. $60 million in cash. They want to produce around 550,000 ounces this year at low all-in sustaining cost at around $650. So that's a very healthy margin at $1,260 gold. And I think, they do their work really right. Haile is in production, in the commissioning, will be fully up and running, by let's say mid-end of the year, hopefully then, and really contributing to the business. Also, they were not affected in the Philippines, which is a very good sign, though, that the company is really doing a great job there. Well, I would say check it out. Thanks for watching us. Bye-bye from Zurich.